Hi, I'm Pattu from freefincal. The mutual fund industry lost 1.27 lakh crores of AUM in 2020. That is, if you compare the AUM that was reported as on December 31st, 2019 to the AUM reported as on April 30th, 2020, the loss for over all the AMCs is 1.27 lakh crores. I just want to report in this video some of the biggest losers and some of the gainers overall for the AMCs and also for Franklin, which I have written a post on earlier. Credit risk funds and liquid funds. So this is the picture for the AMCs, and you can see that the biggest loser was Yes Bank, that lost 76% of debt fund AUM. India Bulls lost 57. IIFL Asset Management lost 54, Baroda Asset lost 48%, IDBI 42, and only then comes Franklin at 40%. And unfortunately, Quantum also lost 34% of its debt AUM. That's significant. BOI AXA lost 32%, Motilal 29%, if I got that right, and so on. You can pause and read off the rest. So that's that. Did anybody gain? And Edelweiss Asset Management gained 300%, but that is because practically almost all of it is because of the Bharat bond ETFs, the two ETFs and the associated two fund of funds. That total AUM is almost essentially that gain. And then JM Financials gained 105% of AUM, and a good chunk of it is in the JM Liquid Fund, which is the oldest liquid fund of India. Then Quant money managers gained 88% of AUM. PPFAS gained 12% of AUM, of course, in its liquid fund. And among the bigger AMCs, SBI managed to gain 5% of AUM. Mahindra, that's not a big AMC, that's 2%. So among the big AMCs, the bank attached AMCs, it is SBI that has gained 5%. Now coming to Franklin, I have a full post on this, so I'm not going to get into all the details. You can look at it. Amusingly, Franklin Overnight Fund went from 173 crores to 1071 crores in April 2020. Perhaps some amount of money was switched in from the other credit risk funds to this. That's a 520% gain in AUM. The other noticeable change is this is for all the funds, for including the equity funds are there. Among the closed funds, the Franklin India Dynamic Accrual Fund lost 37%, Franklin Ultra Short Bond lost 43%, Credit Risk Fund lost 44%, Income Opportunities 47%, Low Duration 49%, and the Short Term Income Plan 52%. They were not the highest in fact, the Franklin Savings Fund lost 60%. Like I mentioned in the post, Franklin Savings Fund, which is a money market fund, lost 60% of its AUM, but it is still in operation. It has not been closed, which means that essentially means that that segment of that market is liquid enough to handle that kind of an AUM change, which is a good sign. The Franklin Liquid Fund lost 71% of its AUM, which is a big number. So that's that. Now let's come to the credit risk section. In the credit risk section, the L&T Credit Risk Fund lost 68%, UTI Credit Risk lost 62% AUM, BOI AXA 62%, Nippon India 60%, PGIM 60%, Aditya Birla 52%, DSP Credit Risk 51%, Kotak 47%, and only then Franklin Credit Risk 44%. Perhaps some of these AUM or much of the AUM shift happened because of the trouble in the Franklin funds, or people realized that there was trouble and they pulled it. We don't know that. I don't have that data. Perhaps I should look it up. That's an interesting idea. Now coming finally to the liquid fund segment. Quant Liquid AUM increased from 71 crores to 168 crores. That's a 134% increase, but then that's not something too much to worry about. I don't want to worry about that. JM Liquid is the biggest gainer with 43% because its AUM went from 1,841 crores to 2,640 crores. Motilal Oswal Liquid Fund gained 31%. Parak Parekh Liquid Fund gained 26%. Nippon Liquid Bees ETF moved up by 23%. HDFC Liquid 22%. IDFC Cash Fund 16%, and so on. And what I do not um, like to read, or where I feel sad about, rather I should say, Quantum Liquid lost 22% of its AUM. That's a little baffling. I don't know. Already they're struggling AMC to get in terms of profitability. I mean, so Franklin India again is the biggest here. 71% loss. S Bank Liquid lost 69%. India Bulls Liquid 58% loss. ICICI Liquid ETF lost 57%. That's strange. And Edelweiss Liquid Fund lost 51%, and so on. So that's the landscape. It's been perhaps this gain is perhaps ETF, perhaps this retail AUM in this the gain in the AUM, and the loss is probably institutional AUM, people drawing out because they want money or they're scared, whatever reason. So overall, if you look at the total AUM that was there in December 2019 and April 2020, it's a loss of 1.27 lakh crore of money. That's a huge loss for the debt segment, considering how the equity is going to do in 2020 at least. So it is trouble for the AMCs, I would say, in terms of profitability. There may be layoffs in the AMCs. You can, if you actually go and plot the AUM of the mutual fund industry, you can see it in Google. You can see that after the 2008 crash, after the recovery, there was a little bit of increase in AUM back, but then after that, there was a sideways market for about until 2013. There was not much happening in terms of AUM. So whatever these advisors say, they will hold my hand, they will hold the hand of the client and do all that and so on. Unless investors see returns, they will not invest, and that's probably what's going to happen again. There's going to be a sideways moment for the AUM as well, and so it's there could be layoffs in the mutual fund segment. That's my feeling. Thank you. Bye bye.